Welcome to the Local Real Estate Show. Join us each week as we hear from local real estate professionals from around the country. We'll hear their stories, get their advice on the current market trends to the best ways to get the most out of your real estate purchases, sales, or investments. Whether you're just getting started and buying your first home or you are a seasoned real estate investor, there's something here for everyone. So buckle up and get ready to hear from the people who know the real estate industry the best. Now your host, Steve Champagne.
Hello, everybody. Welcome to the show. Today, we'll be interviewing Casey Zygiel of Elite Financing Group. Casey, welcome to the show. How you doing today?
I'm doing great. It's Friday, no complaints. So I'm happy to be here. Thanks for having me.
Glad to have you on the show. Okay, so I have a series of questions I'm going to kind of be asking you through this interview. And one of the first questions I have for you is, give me a brief introduction about yourself.
Yeah,
Don't hold back.
Okay. So my name is Casey Zygiel. Right now, I currently live in Sanger, Texas, which is just outside of Denton, but I was born and raised in Denton. I'm a true Dentonite, grew up there. Both my parents met back at UNT in 1980 and stayed around the area to start a family. So I have a 7-year-old son. He's a baseball stud. I love watching him grow up in the area. And I'm also a member of the Denton Chamber of Commerce. I'm part of the planning committee. I just got asked to join the board of directors. And I'm also a member of the Denton Chamber of Commerce. So we stay really busy.
I can see that. It says, I've been having a few interviews with real estate professionals in the Texas area. And where's your twang?
Both my parents are Yankees, actually. So
okay.
I throw that in there. It kind of offsets it a little bit.
Absolutely. You know what? When I was doing my research and I was looking at your social media, I noticed that you went to New Hampshire for school.
I actually attended online school, the Southern New Hampshire University.
Okay.
I went back to school about 4 years ago to finish out my degree, and it was during the pandemic. They had a wonderful online program.
Okay.
Yeah, it was awesome.
Okay. Well, that's why when you say Yankees, I'm like, oh, maybe she's from New Hampshire. All right. So you're a mortgage specialist, a lender, loan officer.
Yeah.
Why did you get into mortgages in home loans?
I think my answer is a lot like a lot of other people's. The corporate grind really got to me. I spent 10 years in the medical field.
Okay.
And as you can imagine, seeing a company change hands and change just generally over 10 years, a lot of the culture changed and I wasn't happy anymore. And I always want to work and be happy. So I knew people were always going to need homes.
Okay.
I'm an ex-bartender. Bartended for 10 years. I love talking to people and helping them out. So I went into mortgage and made the jump.
Okay. I get some bartending in my background too.
Yeah.
Yeah. Okay. So how long have you been a loan officer? How long have you made this career change? How long have you been doing what you've been doing?
Yeah. So I'm in my 3rd year right now.
Very good.
So I was still in the I was still in the medical field in the beginning of the pandemic. And that's when I made the switch and then just broke off with my company that I'm in now about a year ago.
Very good. All right. So you deal with specialty home loans, not the conventional or the FHA. But so tell me a little bit about what specialty home loans are. And I know we're going to be talking about a couple of them here on the show today. So first of all, what is a specialty home loan?
Yeah, absolutely. So just to confirm, I do still work with those 4 major ones, with the big ones. But one of the big special things that I do is the specialty loans, or otherwise known as non-qualified mortgage products.
Okay.
And those are really tailored around 2 types of situations. You're dealing with either life events, like maybe tough credit histories, bankruptcies, or you're dealing with specific income situations.
Okay, very good. All right, so I have a series of questions because during our pre-show call, one of the loan programs that you wanted to discuss on the interview today was something called a one-time closing contractor loan or construction loan.
Yes.
So let's get into those. First of all, what is a one-time closing construction loan? What is it?
Okay, so it's got a complicated name, right?
Yeah, it's a mouthful.
But the premise is to uncomplicate anybody who wants to buy land, build a home, and have a mortgage. And that's essentially what it does, is it takes those three steps of that process and rolls it into one. So it uses the land for purchase as the subject property, then it's going to fund the build, and then it's going to establish the mortgage after that. And it does it all in one loan, which means it's one down payment and one set of closing fees.
I can see if you're building a new home that is a good way to go. So
Yes.
what are the advantages of a one-time closing loan? Seems like you've just answered that question right there. Is there something else that you could go expound on about that?
Absolutely. I can kind of expand on the numbers real easily. So if you're going to purchase a piece of land and then you're going to fund a construction loan, typically you're going to need a 20% down payment for both of those. So to have one down payment that's either 0 to 5%, it saves thousands.
Okay.
And then the other part is, of course, working with builders can sometimes be tough if you don't have anybody that holds them accountable to the timeliness. So when you have a one-time construction loan, they actually have to sign a contract with the investor to complete the job in 11 months. So it really sets up that accountability.
Very good. Okay. What is the process for obtaining a one-time closing construction loan? What is the process of getting a loan like this? What do they have to do?
So it's actually just like applying for any other loan product. So you're going to want to figure out what's right for you. You're going to want to talk to your lender, tell them your plans. You're going to look with your realtor and start bringing this idea to life. Then you're going to want to turn in your application. You're going to want to fill out that application to the best of your ability and accurately. And that's after that is when we start collecting the documents, just like any other loan. 2 forms of IDs, 2 years of tax returns, maybe it's bank statements, last 30 days of paycheck stubs, very normal, basic stuff.
Okay. That was my next question I had for you. So it looks like we got that answered. Fantastic. Okay. So what are the typical interest rates for these types of loans?
Yeah. So interest rates with any non-qualified product, they're always going to be about at least 1 to 1.5 above par. So par rate right now for a standard conventional is right around 6.5%. I actually just did the pricing last night just to get a basic review. I did it on a $600,000 value at a $700 or 700 credit score, and with a down payment, and it was right at around 8.3.
Okay, 8.3.
Yeah.
Will folks have an opportunity to refinance out of that at some point in time if rates are lower?
Oh, absolutely. You can definitely refinance those.
Can you use these type of loans to finance a remodel or a renovation? Is that a question you get answered sometimes on this?
Yes, absolutely. A lot of people want to have that opportunity to take the equity that they have established in their home and refinance. So you can definitely have a HELOC done later on down the road. You can do a typical refinance for any of those home improvements. I'm actually working on a loan right now where somebody's already purchased the land and they own it in a HELOC, which is a home equity line of credit. And now they want to start to build, and we can refinance that to take on the price of the whole project. So that's really cool about it too, is we can kind of really tailor it to the specific situation.
Super. Okay. So you mentioned another loan, loan program that really caught my attention, you being down the Texas market, and that is the I-10 loan program. First of all, what is an I-10 loan program?
Okay. So an I-10 loan program, I love it. People here in Texas, whenever they hear about it, they love to spell it I and the number 10, right? We kind of think of it like a highway, but it's actually ITIN, which stands for the Individual Taxpayer Identification Number. So this is a availability for a home loan for anybody without a Social Security number, but still works here in the United States and has that tax ID number.
Okay. So someone who has a green card or would be a candidate for something like this.
Correct. They might have a green card, but they've got to have that established, and it's got to be valid at the time that the home is purchased, that government tax ID number, and they'll have the paperwork on it too as well.
Okay. What are the eligibility requirements or criteria for this type of loan?
Absolutely. So a lot of the eligibility requirements are kind of like the other loan programs. You need to be working here for the last 2 years.
Hmm.
And when I say here, I mean in the United States at the same job.
Yep.
Your tax returns last 2 years, that's always the same, but they've got to match that I-10 number. If we run into an issue with this typically is the missing link that we always have to fill in, but it's
Hmm.
also easily resolved with the CPA. So as
Okay.
long as all the tax ID numbers match for the pay stubs, tax returns, and the loan application, you're good to go.
Okay. All right. I'm assuming the interest rates on these are not as good as a conventional mortgage or anything. Can you talk a little bit more about the typical interest rate associated with these type of loans?
Absolutely. And you're right. They are not as well as the normal loans. However, the whole part of having a loan available like this is
Mm-hmm.
making loans available to people where they once weren't offered. So
Mm-hmm.
even though they are a little higher, typically we see these around the 8.5 to 10% range.
Mm-hmm.
This can also stay in that range. It can get better or it can worsen depending on what the credit score is. And it's
Okay.
also relative to how much down payment there is. So it kind of works on a sliding scale.
Okay. Very good.
Yeah.
As far as repayment terms, are they like a 30-year mortgage, or are they amortized the same way?
They are amortized the exact same way. You can get an I-10 loan set up in 15, 20, 25, or 30 years.
Mhm.
It can be fixed or at an adjustable rate. And we can also process these loans maybe for people who are business owners. They have
Mhm.
1099s. So we can process it like a bank statement loan too and give that option.
Okay. How long does it typically take to get this type of loan? What's the process involved?
Process can be anywhere from 21 to 30 days. We
Okay.
process these at the same normal rate as any other type of loan. I tell anybody the number one thing that's going to assure that your loan gets processed in the time needed is going to
Mhm.
be how well, how accurately, and how honest and how thorough you are when you fill out the application. So when
Okay.
you can get that application in and you can get all of your paperwork in relatively close to that, you'll be good to go.
Okay. All right. So that wraps up the couple questions about the couple loan programs that we were going to chat about. So let's wrap up this interview. And a question I ask everybody on the show is, why should someone work with you over your competition?
Yeah, that's a great question. So the number one question that I get hands down whenever I meet someone new is
Mhm.
always, Casey, why would I go with you, a mortgage broker, as opposed to someone who's in a bank that I've been a member with for 10 years? And I
Yep.
always tell them, when you go with one person, you're or one entity, you're only going to get what that one entity offers, whether it's a
Okay.
bank or whatnot. Being a broker, I work with over 25 different investors. So when I submit loans, I compare rates to 25 different people. Then I
Mhm.
submit it and I start seeing how they can compete to obtain my clients' loans. And I make them get competitive for my people.
Okay, that's great. All right, the last
Mhm.
question I have for you today is, if someone is looking for one of these specialty loans, how can they get a hold of you?
Absolutely. So you can always shoot me an email. I've got my email attached, but that is going to be my first name, CASEY at
Mhm.
efg.tx.com. I've got a Google business page, so you can always search Casey Zygiel, Elite Financing Group, my name and my business.
Mhm.
And I've also got my own webpage, www.caseyzygiel.com.
Fantastic. Well, Casey, great having you on the show. Folks, until the next time, make it a great day. Take care. Bye.
You bet. Thanks so much. Happy Friday.
You have been listening to the Local Real Estate Show. If you are a real estate agent, a mortgage broker, or a closing company and would like to be a guest on an upcoming show, please visit thelocalrealestateshow.com for more information. Thanks for listening.